Welcome to the latest Motley Fool Scoreboard. I'm on in Chock-a-Balloon. We've got longtime fools, Dan Kaplinger and Jim Gillies, giving a 1 to 10 rating to no one over the age of 12's favorite pizza. It's Domino's, ticker symbol DPZ. First, we'll rate the strength of Domino's business, including factors like industry and competition. We all know the players. A 10 is invincible. A 1 is hopeless. Both of you have 8s, Jim.
Yeah, I mean, this is oligopoly pizza, right? Domino's is one of the big 4 chains in the U.S., alongside Papa John's and Pizza Hut and Little Caesars. I love that it's 99% franchise with over 20,000 worldwide locations. I love the brand power. I love the operational and capital risk is lying mainly with the franchisees, which makes Domino's as the franchisor more of a check cashing business. You get your royalty checks on the regular and, let the operators handle the day-to-day. It's a great deal. There is some systemic risk, I think, from, the very common complaint nowadays. Everyone complains to me about how the expensive, the high cost of eating out. So that knocks my score a little bit, but overall, no complaints here.
I gave it an 8 as well. I love the positioning that Domino's has done in the market. Really adept at social media, at marketing messaging. It's taken what really could have been a losing brand when I was a kid and turned it into, kind of made fun of itself enough to turn it into a long-term winner. And I'm just really impressed by that strategy.
Color me surprised that Little Caesars is still large enough that it's number 4, but sure enough, Jim's right. Domino's pretty sizable lead. I think it's like 40% plus market share in the U.S. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. Dan's got a 9. Jim, you've got an 8.
I do. I'm just looking at it as a long-time management team with bench strength, if you see the moves over the years, and a promote from within culture. Nothing wrong with seeing that. I consider that perfectly acceptable and warranting an 8.
I think more companies should learn from Domino's willingness to admit its weaknesses and aiming to try to do better on them. It's a genius move. It continues to pay dividends years and years after the initial campaign. I also like how Domino's has integrated technology. That's been an important trend, and it's something that the market appreciates as well.
I should say, by the way, Domino's has 40% plus market share among those 4 companies. So not including all the mom and pops and all the other chains. Yeah. For financials, a 10 is a fortress. A 1 is yikes. Both of you have 8s, Jim.
Yeah. I consider franchise businesses, of which Domino's is, to be cash gushing machines. Little to do with their cash, but pay dividends and buy back stock. And that's exactly what they've been doing. Their share count is down by 38% over the past decade. Their dividend has risen at about a 19% annualized clip, up 6-fold over that same decade. The only reason this is an 8 and not a 9 is there's a little more debt there that I think would probably would warrant a 9. So that's why I knocked it down.
I also love the cash cow business. I ding it a couple of points because its growth has slowed considerably in recent years, but still looking strong. Let's
talk valuation, Dan. How well will Domino's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I'm in my usual 5 to 10% range. I think we'll be at the higher end of that on Domino's. It's just a really reliable business. I think the premium on reliable businesses will go up in the near future. I give it a safety score of 7. There's always a threat of competition here. And in the back of my mind, I'm always wondering, okay, how much more mileage are they going to get from this self-deprecating attitude? But so far it has legs. So I'm comfortable riding with it.
Yeah, and I agree. That's a brilliant move. The M&M from 8 Mile, list your own weaknesses and take them away from your opponent. So I do like and agree with Dan. That's fantastic. I'm in the same return range, 5 to 10%. Safety score slightly higher at 8. Look, the valuation isn't cheap here. It is lower than historical highs. Arguably, asset-light franchise businesses deserve premium valuations, but trees do not grow to the sky, and there are already, as mentioned, more than 20,000 Domino's in the world. Balance sheet has some debt. It's easily serviced, and banks would probably fall over themselves to line up to roll the debt when needed, given the brand power, cash generating power, etc. here. So good quality company, just maybe a little more expensive than you want.
Thank you to both Dan and to Jim. They've given Domino's a strong overall score of 7.4 out of 10 with strong fundamentals and I argue one of the best marketing machines in the world, given how not great the pizza is. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, Fool on. What is your favorite beard doppelganger? Hacksaw Jim Duggan?
Yes. Yeah, I love the reference. Wow.